All right, everybody, I got a number for you this week. 791 million pounds. So that's how much polyethylene inventory was added to the US here in May in the preliminary numbers in one single month. Of 11 years worth of data we were looking at, it's the largest inventory build in recent memory, with days of inventory approaching 47. This week, producers are trying to push a 10-cent increase. I'm Michael Workman with Resin Market Moves, and this is for the week of June. Well, today's June 13th, and this week, the data and what's happening behind the scenes are telling very different stories. Let's start at the top. We got the preliminary inventory data that I mentioned for May, and across most of the major commodities, the picture is really similar, with inventory building, demand continuing to soften, and exports either pulling back or not nearly to the expectation that was out there before this Iran conflict. Polyethylene, as we talked about, it built 791 million pounds, about 100 million pounds in polypropylene, which is nearly 2 billion pounds total. PVC added another almost 50 million pounds despite production rates rising. Polyethylene, the demand was down over 10%. Polypropylene domestic sales were down 6%, and polypropylene exports came down as well, 22%. So if we think about all those percentages, right, producers have real costs. Feedstocks have been volatile. Nobody's saying that costs have not gone up, but the cost pressure and pricing power, remember, are two very different things. And right now, the market is very long in inventory. On polyethylene, 10 cents is the ask. The inventory data says no way. WTI dropped again last week, more than $5 a gallon. Ethylene continues to be in the low 24-cent a pound range. And, there's nothing really in the feedstock picture that supports adding that cost into the market. The thing we need to keep our eye on long term, Golden Triangle Polymers, that joint venture with CP and Qatar Energy, it's expected to bring more high density polyethylene capacity online here in Texas, about 2 million metric tons. It's not going to change June, but it's another data point for the longer supply story. And polypropylene, 3 cents is the ask. PGP dropped to about 38 cents a pound this week, which is important from a directional standpoint. The second half of this month is expected to be softer on pricing. If you have any flexibility to wait in back half, I use the back half of June negotiations in your favor. Total, they're officially still under force majeure, but their lines are running, and Phillips 66 does have the planned turnaround up in the Northeast. So maybe some localized tightness, but it shouldn't really move the big picture North America market meaningfully. In the nylon category, BASF is out with 10 cents a pound on both 6 and 6.6. The buyer resistance here continues to be very strong and quite frankly justified. Nylon 6, remember we look at caprolactam there, which did fall again. Over $100 a metric ton just last week. And that's a pretty significant feedstock move that weakens the cost position, or at least the justification for an increase there. Nylon 6.6 continues to be a bigger picture story with some of those assets coming offline. Celanese's Singapore polymerization unit. It's going to change the go forward picture, but it doesn't justify a June increase in today's market. PET is its own separate kind of mess right now. It is peak bottle season. We do have the World Cup going on. Just a quick plug. What an incredible first match for the U.S. yesterday, 4-1 victory. But, that really is impacting the PET market. And with the hurricane risk getting started, remember a lot of those PET assets are in the Gulf. There are genuine demand supports here that are, kind of pushing that cost position up. So remember to use your contract timing strategically. And if you look at the feedstock picture, it's actually slightly up on both the spot markets, but the June contract is forecasted to go a little bit lower. All right. So what do we actually do with all this? I'll boil it down to 3 things. First, lead with the data in your conversations, walk in with your numbers. Your supplier is likely to have them too. When you say, almost 800 million pounds of polyethylene was added to inventory last month, your not speculating. You're citing what's in the data. A second, it's important on the timing. So keep that in mind, especially with polypropylene. The second half of June is expected to be a little bit lower with PGP costs. If you can push your negotiations into the back half of this month, buy yourself in a couple of weeks, you should have the feedstock trend moving with you, not against you. And then the last thing, again, is to continue to stay disciplined. It's really a moment where giving a partial concession to meet in the middle becomes a new baseline for another nomination, either next quarter or next month. Flat is a win. A partial rollback is even better. Don't give back ground the data doesn't support is the main message. So that's this week. Supply is building, demand is soft, and the second half of June is going to favor the buyers who hold their position. And if you want to know exactly where your resin prices stack up against the market, this is the big picture spend, category level, all the way down to the grade and plant level. That's what ResinSmart does. Link in the bio, reach me directly. Buy better this week than you did last, and we'll see you next time. And a quick plug: next week we are bringing Resin Market Moves live. So we'll have a live session on Monday, 11:30 Central. I can't wait to spend some time live with y'all and celebrate 1 year of doing these. All right, have a great week, and we'll talk to you soon. Cheers.